More now on our breaking news this hour. The Bank of Canada releasing its interest rate decision. Let's go live to Jamie Goodfriend for more on that. Jamie.
Thanks, Jackie. As predicted, economists were expecting a 50 basis point increase to 1%. With more on today's announcement, let's bring in BNN Bloomberg's David George Kosh. Thank you so much for joining us once again, David. This was obviously expected. The big question is this really going to curb a 3-decade high inflation rate that's just seen out of control housing prices, and just pretty much the price of everything has gone up? What do you think?
Well, Jamie, it's certainly not going to be the magic bullet that's going to stop that 5.7% inflation just like that. But it is a start. And the Bank of Canada did highlight in its rate decision announcement that it does expect inflation to remain stubbornly high, averaging around 6% in the first half of this year, dialing back down through the latter part of the year. And in 2023, they do expect inflation to come down to the 2.75% level, so essentially cut in half to what it is right now. It'll go down further to about 2%, according to the Bank of Canada's projections in 2024. But again, that's 2 years away, and the Bank of Canada did highlight the ongoing situation in the Russian-Ukraine war, as well as supply chain disruptions and commodity prices, as leading to that inflationary pressure, keeping prices high. So it's going to be certainly interesting to see if the bank's forecast will actually pan out, or if it'll be extended, given the fact that there's just so much economic uncertainty right now in the world.
And we also don't know exactly how many hikes were expected. I've heard some mixed reaction as to what we could see by the end of the year. Could see maybe a 1.5%, but even some economists were saying even a 2.5% to 3% by the end of the year. That's got to be concerning for many, especially home buyers out there.
Well, yes and no. I mean, we're essentially raising interest rates from a near zero level, and it's not necessarily going to rise to the extent of what we've seen in the early 90s of the 17, 19% interest rate. So going from 1% to 2.5% will certainly create some sort of issues, or not necessarily issues, but will create some sort of downward pressure on the housing market, for example, or inflation. But it won't be that sudden of a shock. The Bank of Canada doesn't necessarily want to shock the economy. There's a talk of a recession happening in the U.S., and anytime something happens in the U.S., Canada usually feels it a month or two later. And there's obviously the Bank of Canada has this high wire act trying to balance inflationary risk and keeping that down with its monetary policy and avoiding a recession here in Canada. So essentially, according to Bloomberg, economists widely predict another 25 basis point or a quarter of a percentage point rate hike for the rest of this year. That will raise the interest rate to an average of about 2.5%, according to Bloomberg data. But again, it's going to be interesting to see if that actually happens going forward, given what we see in the economy as well as what's happening in the world as well.
And especially for those buyers who maybe been sitting on the sideline, they've been saving up some money for that down payment. These rate hikes might cool off some of the housing market, price some of those people out of the market as well. But for many people who have been holding on to the variable rates, I'm not sure if this is going to really affect them too much in the short term. But at the end of the day, a couple $100 out of someone's pocket a month might be a big difference for them moving forward with this hike.
Exactly, and you can count myself in one of those people that has a variable rate mortgage. So I expect my bi-monthly payments to increase by about $50 or so with this announcement. But again, you're right. I think there's going to be, at least on the fringes, some pressure on the housing market that will be taken down given the half a point hike that the Bank of Canada just announced. But again, we're not necessarily moving in a significant rise that will take a lot of people out of the market. It'll likely create some downward pressure, and we're starting to see some cooling signs, especially in Vancouver, where the market there is extremely hot. But again, it's going to take quite some time until the housing market here in Canada cools down and becomes more affordable. And I think that affordability question is going to be something that is going to be resonating for months to come. We're not going to see the price of a detached home in Toronto go down too much further from $1.3 million. It's not going to go below $1 million anytime soon. So that affordability measure will still be crucial going forward. But again, the rate and the rise and the pace of this growth may come down quite a bit.
BNN Bloomberg's David George Kosh, we appreciate the update. Thank you.
Thanks, Jamie.